and it's great to see you here. So my name is Mark, and I'm managing ThetaRay. And when people ask us what do, we use big data analytics to identify needle in a haystack. That's what company does, but it sounds like a cliche. So we'll give a few examples when we really do it and how we do it. I believe better than others. But first of all, it's really great to be one of the last speakers, because I think for the entire 2 days we spoke about digital transformation, online banking, affiliate banking, and basically it caused the entire threat environment to change. To say it bluntly, and I guess I don't need to say it to you anymore, to say it bluntly, people will not, these days, when they would like to steal money from a bank, will not come to a branch of a bank and try to shoot in the air. Right? It still happens in Hollywood movies, by the way, but it's not very effective. There's not much cash in those branches. Today, the bon ton and everything I will be telling you now are real cases from real customers that we have. Today, the bon ton, and it changes, is to steal $1 from a bank account. It might be done from somewhere in Eastern Europe. I just came from the United States, so in the United States I say from Russia, but here I'm very more careful. And you are there. You steal $1 from a bank account by breaking into certain applications. You call this $1 iTunes transaction. You only do it for people that have about 40 or maybe 50 iTunes transactions a month. Nobody pays attention. And then because you use computers, everything is online, you do it 20 million times in a row. And then it's a big problem because you take the money. It's very little risk, by the way, because in the worst case scenario, just shut down the network connection and that's it. No physical risk. And it's just one of the examples. By the way, this type of attack, the devastating thing about it is that it might never be discovered, or it might be discovered at the end of the year where auditors will try to reconcile accounts and they will see that something is not reconciling very well. But if you look at large banks, $20 million might not even appear in the audit report. It might be a rounding mistake. And then it becomes a big issue. So the threat environment has changed. Everything is online. I guess you see the results. And I mentioned just one type of sort of fraud activity. I will share with you some other use cases that we find very popular. But you can see Swift that lost money, ATM attackers, and I will tell you more about the way to steal money from ATMs that is pretty innovative. Yeah, you will get sort of a hacking course of 25 minutes, and then you can try it at home. And the real problem is that we all understand that something is going on, but the amount of data becomes huge. So for some banks who were established in 2009, you have full control of your data. But if you work for larger banks, sometimes you not only have a lot of data, but data coming from different sources, and sometimes you don't even understand what to do with this data. Some of you might have databases that were written in COBOL. You are too young to remember this type of language. And some people who build those databases are not with us anymore. So you have field names that you don't really understand. Sometimes data comes from different sources. Let me give an example. I'm here in London. I'm making an online transaction using a great account through O2. And it looks like genuine transaction. But IP address, for those of you who are not techie geeks, IP address is the internet protocol address of your phone. Every phone has a number. Shows that I'm in Africa. And geolocation information, if you have a new phone, it probably have some GPS capability, shows that I'm in Lagos, which is the capital of Nigeria. And temperature information, because most of the phones today will measure temperature, shows that it's 50 degrees Celsius. You might assume, or at least agree, that there is some indicator here that something wrong is going on. Most of the banks will ignore this information because they only look at sort of financial transaction information to identify fraud. And the amount of data is huge. Now, we not only do banks, we also do cybersecurity protection of airplanes, etc. One airplane, which is a different domain, accumulates 20 terabytes of data one flight. Somebody needs to analyze it in real time. And of course, we were all using traditional methods, which are basically built on rules, thresholds, signatures. Doesn't really work these days. There are many companies, by the way, that were very innovative 20 years ago, Actimize and Mantas, etc. And in some cases, you might find yourself with tens of thousands of rules describing different ways to steal money. But what happens if hackers discover a new way to steal money from you? You need to add additional rule. But if you have tens of thousands of rules, it might take you 4 up to even 6 months. Too slow. Hackers act very fast. Criminals act very fast. And also when you use those rules, it's very difficult to build rules that will be system-wide. I just gave a previous example about what banks will call metadata of a financial transaction that come in from the IP world. In many cases, we see that banks have different people dealing with financial risk, with cybersecurity, and with IT. And sometimes it's even difficult to put these people together. And the last problem is that when you have so many rules, you have a lot of false alarms. One of the largest banks in the United States, our customer, have a level of false alarms for AML that is 99.5. So for one real problem, you have 200 false problems that banks needs to deal with. Each time you travel all around the world and you're getting this message, or somebody's calling you, telling you, did you use your credit card? You know, it's a false alarm. It costs a lot of money to the bank. It causes issues to you as customers. So there is a need to find a solution. And that's exactly what we did. So we built a software based on analytic research done by 2 distinguished professors. It analyzes data from all the possible sources. We're actually data agnostic, so we can analyze any type of data, combine this data, and without really understanding the data, which is a key part, because you not always can understand or build or even guess what should be the relationship of the various data sources or data points to be an AML indicator or fraud indicator. Our system analyzes this data and in real time provides you results that showing that something wrong is going on. And when we start to look at data, we start with any assumptions. We believe that if you have assumptions about data, if you know what you are looking for, you're bound to lose things that you don't know that you don't know. I know it sounds a little bit like black magic, so add a little bit of credibility, and I will not show you the mathematical description of what we do, but you can type Theta in YouTube. To our founders, Professor Koifman from Yale, recipient of Golden Medal of Science by President Clinton, 20 years on the advisory board of DARPA. DARPA is the entity that invented the internet, etc. And another professor who spent 10 years in IBM, Columbia University, etc. But instead of talking about theory, maybe I will show you 2 use cases, and I guess some of you can identify with those use cases. So we just mentioned consumer lending. One of the largest European banks, who is now our customer, decided that they will take their offline business and make it online. Everybody does it these days. You don't need to go to a branch of a bank to take a small loan or even a small mortgage. And what I found was very interesting. The same business that worked for them very well in the offline world stopped performing in the online world. So many default loans, etc. And they tried to understand what's going on, brought a lot of consultants, 6 months, no success. And then we installed our software. And the way our software works is it collects historical data of all the transactions. In our case, it took us 2 hours, our software 2 hours to collect historical data of 2 months of transactions, and immediately start identifying problems. And within 15 seconds, we found 12 transactions with total value of more than 9 million euros that were fraudulent. Now, let me tell you what our system found. And imagine for a second that you are an analytic expert or forensic expert for a bank. So what our system does, it connects all the dots to all the dots. And we found 3 parameters that the relationship between them was suspicious, although each and every one of them was okay. First parameter was age, which for our systems mean nothing, and just a number. But for a bank, it means age of the consumer. And the ages were between 16 to 19, which is young, but it's a legal age in most of the countries. The second field was transaction size. In this case, all the transactions were less than average, which is usually an indicator of pretty safe transaction, low risk. And the third one was transaction type. And type of transaction was, of course, loan. And the type of loan was small mortgage loan. You know, when you take a mortgage for your car or small apartment. Now, each one of them is perfectly okay. That's why the systems they use, which is FICO, Verizon Corporation, Norcom, and Actimize, couldn't find any problems. But when you look at the relationship, can you see something weird? I see that some of you are smiling. They gave mortgages to minors, which I believe is illegal everywhere. And when we first showed it to them, they said, oh, it can't be, you know, it's illegal. Don't tell us that, well, that's what we do. And they're right. In the physical world, it could never happen. Because in physical world, you have a physical clerk looking at physical customer that comes with physical ID, making them sign physical papers. But in this case, everything was online. And of course, this bank is a smart bank, so they developed beautiful front-end solution that actually had a connection to what they call the social security number or database. And when you put your social security number or ID number, it will check what is your age. But what hackers found, and this is the connection between cybersecurity, online, and the old world of fintech or financial institutions, what hackers found that if there was a bug, and if they shut down the connection to this government database, there will be a bug, and the loan will not be rejected. And of course, what they did, they took real kids, took a lot of loans for real kids, real names, real assets, and after 2 years, when people didn't pay the loan, they came and said, we will confiscate your collateral. And then parents said, what do you mean confiscate collateral? You gave loan to 16 years old kid. Would you like us to go public about it? Now, you know, banks have trust relationship with their customers that really didn't want it to become public. And then they made a mistake. So first of all, they made this thing disappear. Just said, okay, it's a non-performing loan. But they didn't even, and I guess you're familiar with these situations, they didn't even communicate it to the fraud department because they were so afraid that it will become public. So when they brought McKinsey for 6 months, these poor guys couldn't find anything because the loans were marked like non-performing loans. Of course, you need a lot of big data analytics to identify it. And maybe the next use case is ATM security. I will do it very fast. I don't know how many of you do deal with ATMs in this room. Anyway, good. So anyway, ATM, you know, ATM, people think about ATM as a sort of a smart machine. It's a box with a small computer, usually Windows XP, and few motors. One of them is called dispenser that dispenses money, and the second one called actuator that opens the door, right? And because those devices are connected to the internet now, it's actually Internet of Things, hackers found a very interesting way to steal money. So you just send commands, what they call SCADA commands, to the motors through the backbone. And then you can see a very interesting phenomena, a real one, by the way. And more than $1 billion has been stolen all around the world this way. You sit somewhere in that country that I mentioned before, you press a button, and then somewhere in Latin America, dispenser starts to spin, actuators opens the metal door, and you see a very interesting phenomena of money coming out of the hole in the wall. You don't even need to touch the ATM. The only limitation factor is that you need money mules that will come with a bag and fill those bags. Now, in the real world, those guys are very smart. It's organized crime, and it's active for the last 6 months. And what they did, they actually never steal more than 5 notes at single ride on ATM, because internal procedures, and I hope I'm not disclosing anything, but usually ATM will have about 8,000 notes. So 5 notes usually considered to be a mechanical mistake or counting mistake. You know, sometimes ATM, like laser printers, can take more than 1 page. Never happened to me, but theoretically it can happen. Obviously, you need machines to discover this type of attacks because existing systems don't even know how to identify what they call SCADA commands, which are hardware commands. So I'll not dive into what Tetheray does, but we provide this type of solutions for fraud, whether it's credit card, multi-channel fraud, etc. AML becomes more and more important. This money that was stolen, one of the largest banks in the world, the CEO discovered that this thing is happening from Facebook. I mentioned to you that there was a need to find money mules. So one of the companies that were working for them sort of looking at deep web to understand what's the narrative about the bank, found that criminals looking for money mules to steal money from ATMs of this particular bank. Now imagine a CEO of a company, which is probably one of the largest banks in the world, doesn't know that this thing is going on. In case of this bank, it was about $100 million. Now luckily for this bank it was fraud, but imagine that this money will be used to finance ISIS. Then it probably will see it very different people. It will not be Federal Reserve, in this case it's United States. Probably will be like guys with black suits coming to speak with the CEO. CEOs of banks don't like this type of situation, and that's why they buy our solution. So in a nutshell, we had to create very intuitive user interface because we discover things that people don't even anticipate that they will find. So how do you present the unknown unknowns? We found that what's unique about our system, and since the systems that are really based on very deep machine learning, is first of all, we produce unmatched detection rates. On average, we find between 3 to 6 times more fraud than existing solutions. Not because we are smarter, and by say we, it's our algorithms, because we look at data that others ignore. But the main reason I believe those guys buy a lot of our solutions is because we reduce very strongly the level of false alarms. If you think about it, the more rules you have, the more data you have, the higher is the level of false alarms, right? It's like home burglar alarm systems. The more sensors you have, the higher will be the level of false alarms. It creates detection fatigue. People can't deal with it anymore. And in our case, we lower the level of false alarms by about 100 times. Because we don't use any rules, signatures, thresholds, and system teaches itself with every transaction. So I will skip some of the banks that even went public about the solutions they have with us, which is very nice because usually banks don't talk about security solutions that they buy from others. And you know, we started with the fact that we built this company to find the needle in a haystack, and we felt that that's what we did. But in reality, we learned from our customers that it's not about finding a needle in a haystack anymore. It's actually about finding a needle in a needle stack, because all the transactions look the same, all the threads look the same. How do you find the one that is really bothering you? But that's exactly what we do. We're lucky to receive quite a nice number of awards. For those of you who read Gartner reports, they've just chosen us to be a cool vendor, and we appeared in the 2 latest reports from Gartner. So as a summary, I believe that we deal with the real need, and we see that all the rule-based solutions, with all the knowledge that was built for the last, I would say, 100 years, is not enough when we move into the new world of online solutions. I guess you, being banks, see others that actually become more and more software banking solutions. Companies like PayPal, we have a lot of work that we do with Alipay. I don't know if you're familiar with this company, or Ant Financial. You should be. It's 10 times bigger than PayPal. It's Chinese. It's a daughter company of Alibaba, 10 times bigger than PayPal, and they use 1/3 of the people of PayPal. And now they're actually proposing 7 lines of businesses, including lending, banking, etc. All is online, all is based on the database that they created by Alibaba customers. By the way, in their case, and they make it public, the thing that we with them is synthetic identities. I don't know if you face this thing here in Europe. Customers just use machines to open hundreds, if not millions, of accounts, and then you need to deal with those accounts, etc. Our technology is pretty innovative, allows customers to identify the unknown unknowns. Experienced team that we have, great partnerships, investors. One of our investors, General Electric, but we also have largest banks invested in us, tier 1 institution customers. So I would love to talk to you more about various types of or various ways to steal money, but also various ways to protect. And you know, we believe that the world is changing to machines speaking with machines. In industrial world, it's already happening. Machines speaking with machines. We come into a world of IoT where your refrigerator will be able to conduct financial transaction. Amazon today sells those devices for $4 where you push it and you get a toothpaste coming to your house, and then you push it in another place and you have towels coming. We see that 40% of financial transactions now are actually machine-to-machine transactions. And we see that, unfortunately, human beings are not enough to deal with this type of transactions anymore. And you need machines to help human beings to deal with this huge amount of traffic. And that's what we do. We hope we make the world a safer place, at least the world of financial services. So thank you very much. If you have any questions. Sure. So it's a very good question, and I will divide it to 2. So first of all, how much historical data we need is depend on the size of a bank. We currently need a lot of data, so we work with larger organizations. Usually in large bank, a few weeks of data will be enough. We usually require like 1 or 2 months. The second question is, how fast is it? Because for people who are really experts, basically if you think about financial transaction, you have about 100 at least 100 parameters. Usually it's 1,000 parameters if you collect all the metadata, etc. And you have like tens of millions of transactions. and you need to compare all the parameters to all the parameters all the time. If you do it brute force, and that's why historically companies were not very successful in doing it, and that's why anomaly detection had a bad name. If you do all those comparisons, it can take you about, with this calculation, 300,000 years to analyze 1 day of trading. And one of the things that are smart about the patents that we have, and we acquired them from Yale and other universities, is that our system does it in real time. So we do need a lot of data to tune our system, but it's done automatically. Deployment time is between 2 weeks to 1 month, compared to like Actimize or Norcom that can take you 8 months. Because our system don't need to understand the logic behind the data or the context of the data. We just need to be able to digest the data. And then the system is up and running. And then the more it runs, the smarter it becomes.
So having worked in bank for a long time, every time I hear that somebody wants to extract our data, I get very worried. Because data are completely imprecise, they're not correct, they come from different systems. So if you want to compare and contrast, you first need to clean the data, otherwise you cannot use it. So how do you address that challenge?
You're absolutely right. People think that banks are very precise. Yes, you're right. Unfortunately, data is in many places. It's almost impossible to correlate data, and the data is not clean. I guess you will not be surprised how many customers we see that are more than 6 million years old, because some time ago, nobody made sure that you couldn't put phone number in the age field, right? And then suddenly you have data that is totally polluted and you need to clean it. So first of all, our system, because it doesn't need to understand the data, can work with very dirty data. It can, by the way, it identify data integrity issues very fast. Some of the customers use our system to be better compliant with Basel Convention. So just the data integrity, sometimes it's a use case for our system. It's not what was intended to do. And it's not easy. It's not easy because if you talk about financial transactions, for example, and somebody does financial transactions of 100, 100, 100, and then like 1 and then 100, you might assume that it's a mistake. It's actually 100. When you measure temperatures, when I talk about mobile phone, and you have like 22, 22, 0, 23 degrees, you might assume that the number in the middle is 22.5. But when you talk about internal fraud or insider threat, and you talk about attendance data, and you have 1,000 employee attended, 1,000 employee attended, and then 0, then 1,001, you can't replace it with 1,000.5. So the algorithms to deal with data integrity is something that took us a lot of time to develop. But yeah, it's a very good point, and I guess for us it's one of the selling points. Again, because we don't really need to understand the data, we can be very efficient in dealing with this issue that is a real issue for financial institutions.
My question is, actually, I would think that you have two clients. So the bank on the AML part, on the risk part, but you also need another part is the auditor or the regulator. How do you make something like this understandable to a regulator?
Yeah, so
just tell him there is no rules, the algorithm learns by himself, watch this YouTube video, you'll understand.
Yeah, so actually it's a very good question. So I will take the easier part. The audit part is easy. Most of we work with PwC, KPMG, Deloitte, and now EY also would like to do it. And basically the demand comes from within. You know, one of the problems with audit is that when you do your audit, when it's an yearly audit, it's effective for about 24 hours, and then it doesn't mean anything anymore. And what customers actually demand is what they call real-time ongoing audit. And they are willing to accept some level of what you call deep learning or neural networking. And the second part is regulators. And you're absolutely right. Historically, regulation was about rule-based blacklist, whitelist approach. And it still works, but what really happening because of the world of cyber, and I think we have some representatives of regulators, the regulation becomes more fuzzy when you deal with cybersecurity attacks. In some countries, whether it's United States or Israel, you actually have a regulation. The language of regulation is that a bank or board of directors of the bank should appoint a person that will take the necessary rule to deal with cybersecurity attacks. and without any specific rules. And it's very smart, because if you don't do this fuzzy type of regulation, you can't be in a position that you will tell the bank exactly what rules you need to put in your firewall. It doesn't make any sense. So you're right. Our system is currently not a standalone system from a regulatory point of view. We find AML indicators, but we make sure that we call it indicators, because at the end of the day, somebody needs to make a decision, to do some sort of research to make a decision that it's a real thing for the sake of a regulator. That's why, for example, we currently don't use our system for loan granting, although we checked it and it's amazing in finding people that will actually repay the loan. But we deal with fraud and risk and AML, and we don't deal with credit rating, because then you need to explain regulator why this person got this type of credit rating or not. So in that area, we use our system only as a support system. I believe that the regulation will change there as well. Today in the United States, 80 million people cannot take any loan or open a bank account because the credit score is very low. And actually, we work with the 3 credit agencies in the United States to find a way to use our system and still be sort of still apply to the fairness rules, etc. We believe that one of the next versions will introduce the rule-based part, very small part for our system, to be fully regulatory compliant. But now most of the banks that already have rule-based solutions, such as Actimize, Norcom, etc., take in our solution because the existing solutions don't work for them anymore. So in many cases, we sort of count on existing solutions to do the blacklisting. But even if you have a list of accounts, it's still an issue. And just last but not least, even according to existing regulations, you're not supposed to, and it's one of the things we actually dealt with, you're not supposed to pay for ISIS oil, for example. And if you try to transfer money to Syria, all the, any SWIFT sort of, or any correspondence bank will stop it, because they all have blacklist of names. But it becomes more difficult because names are not unique, you misspell the names, etc. And most of the cases, if you will do it, in spite of the fact that you follow all the rules, and you will fail, and money will be used to finance ISIS, you will still be liable. So banks would like to take the risk of sort of spending a little bit more money to qualifying the indicators that we provide, rather than taking risk of paying billions of dollars of fine. It was a long answer, but it was a very good question.
So just finally to conclude without any more questions, I have one. In this ongoing battle, are the good guys winning?
Yeah, so it's a good question. This is my 5th company. All the companies were pretty successful. The last one is a company that actually still works with government agencies, providing them ability to find a needle in a haystack, because I guess if you see the latest CIA leaks, you can see that governments collect everything. And some people tell me, is it possible to collect everything? I say, yeah, it's much cheaper actually to collect everything about all the people. But how do you find the next 9/11 or the next human trafficking event or the next terror attack? So we built algorithms for those organizations that find this bad guy very fast. And there was the same question. I have to say that at least my experience shows that time after time, this movie has a happy end. Means that bad guys are running much faster, they're much better financed, and they don't have a lot of regulations that stop them by producing their products. And yeah, it's difficult. We all talk about ransomware. Many people say, oh, this was this hacker that sent email to me, told me if I don't pay him like 2 bitcoins, it will decrypt my computer, etc. Many people really believe that there is a hacker that's sending those emails. It's all automated. Machines do it automatically. There is a CRM system that looks like Salesforce.com, and I've seen it, beautiful. You can do affiliation, and then you basically get the tools and you write your own social engineering message, and still good guys find solutions. So I believe in this sort of endless loop, or cat and the mouse rate. Eventually good guys win, and then bad guys come with more troubles, and then again good guys win. So yeah, it has a happy end. Thank you very much.
Thank you, Mark.